JC Direct number 613 for 14 January. As always, what we do this time of the year, predictions, Keith McLachlan, Marc Ashton, and myself. Gents, appreciate your time today. Happy New Year. Do we still say Happy New Year? I suppose we can just only.
Yeah, one more day.
The second week of January, it counts.
Okay, no, close enough. 14th is here. We're going to have a look at what we did last year in terms of our predictions. Then we go back and we will go forward rather and give three each, and then of course a rand and a ZAR. Mark, I'm going to start with you because you had one which you called your sort of golden ticket one, which was if Aston Villa won the league, you won everything. You're still here. You don't look hungover. I assume they didn't.
No, we had a solid performance. We came in fourth, Champions League, better than Man United, better than Spurs. We're still around, so yeah, no complaints there.
Solid. That sounds like my report card. Okay, let's get to the other predictions. So, Mark, you said the ANC would fall below 40%. And I got to say, this time last year, that was a completely and absolutely ridiculously crazy prediction. And you went very far wrong. They got 40.2. And I got to say, I'm keen to do a rounding here and round the ANC down to 39.9. No one would mind except the ANC. And I think we should give you the point because
I'll take it.
Yeah. I mean, as we got closer to the election, the ANC predictions were lower and lower. But at this point, there was January last year. MK wasn't even a month old. There were still thoughts that the ANC could crack 50.
Yeah. No, I mean, I think it's been a complete reshuffle in the world of politics in South Africa. I mean, I know there's the cynicism around the GNU and what have you, but I think it's no longer going to be business as usual. I think we've had a tipping point in terms of politics in South Africa, and I don't think we're ever going back to a hyper-dominant party in the country. And somehow we need to get coalition politics working together. I mean, it hasn't been without its faults, and there are plenty of challenges. But, for the first time, I get quite excited when you see some of the new voices coming through in Parliament. And there's stuff's not just being rubber stamped. We may not agree with some of the voices, but the reality is that, that's what makes a democracy work is a bit of robust debate. So, yeah, I think it's exciting. It may be noisy, but I think it's positive.
And it shows us as a mature democracy. I mean, ANC lost and they were like awkward and kind of moved on. No Mozambiques, no other parts of the world which don't quite so move on. So that was your first one. Your second one was, you said gold up 10% in 2024.
Sure.
I didn't bother to check. That's an easy win. Your third one was, you said Cape Town Stock Exchange market cap would double to 20 billion. And I think Outvest has left, so it probably collapsed to 2 billion.
Yeah, it's been I think that was one of the it was a very binary thing, losing the Outvest listings. They were kind of the champion of the Cape Town Stock Exchange. I mean, I think there's still some interesting things happening there in that infrastructure market. I know the guys from Gaia, for instance, have been talking a lot about the lack of a secondary market for infrastructure projects. People love the idea of the predictable cash flows and the nice assets, whether it's water, whether it's NG roads, whatever it might be. But the biggest problem that those funders for those projects seem to have at the moment is some form of secondary market to be able to exit or find a valuation for it. So I didn't call it. I think the exchange didn't perform as we thought it might. But, I mean, I do think that there is some interesting things happening in that space as well to watch out for in 2025.
Yeah, no, agreed. And you then said top 40 would be green. We were 67,200 odd a year ago. We set 74,200 now, notwithstanding a recent sell-off. And then we get to the rand, which is complicated because the rand was 18.97 last year, and according to my screen right now, the rand
1895.
Okay, I've got 96.
Okay.
So we are 1 or 2 cents stronger, and you called it weaker. So I'm gonna bounce you on that. So that's 3 points for Mark. Keith, so you took a whole new way. You've gone away from your complex predictions, and you're now going really, really simple. You said Ramaphosa would still be president. at this point in time. And I hear you. I mean, there was an election, and we must also remember that there had been, the Pala was actually the year before. Anyway, he is still president. You said the Russia-Ukraine war would be ongoing. That is ongoing. Trump will apparently end it on Monday, but it's not yet
that'll
Monday.
be a much more difficult call this year. So I'm not going to make it.
And then you said the VIX rather. You made a great point that there was lots of uncertainty, but the VIX was at 12.7, which was basically saying everything's fine. You said
Insanely
it would
low.
Yeah, and you said it would double to around 25. I think it went to 61 in September when there was suddenly that panic around Japan, which is the second highest. The highest previously was 2008.
Just to remind everyone, Japan was collapsing and the world was over on Monday, and by Wednesday morning it wasn't.
Yeah.
That was the unwind of that was the big unwind of the Japanese carry trade that's been building up for like 30 years, and arguably I would say in 2 days it hasn't cleared out, but definitely the panic was gone.
Yeah, we had folks in America calling for immediate 100-point rate cuts and all sorts of panic, and nothing happened. Yeah.
By Wednesday, everything was fine.
Yeah. You then said top 40 would be higher. You said ZAR would be weaker, which gives you 4 points by 2 cents. If the rand, if you could move the rand in the next 12 seconds, you'll get a 5 out of 5, which would be.
Wait, let me just hit some buttons.
My predictions were: I said the Finny would be negative. I had lots of good reasons behind it. I was wrong.
I can't remember what those reasons were because it was very not negative.
Well, because consumers were struggling, they'd had the great Jaws effect, they'd made tons, they'd run hard. The back foot is obviously the dividend flow was already going to just give you sort of 7 or 8%. But again, I didn't bother to look because it wasn't negative, not by any stretch. I said gold would make new highs. Yes, I said there would be no U.S. recession. Again, if you remember this time last year, we were going to get 6 U.S. rate cuts. There was risks of recessions and no to both of those.
And sorry, Simon, just to pause you there. 2 calls that now seem very obvious. ANC at 40% and US not having a recession, that we, with hindsight bias, go, those are obvious. At the time we had this prediction show last year, those were the furthest thing from obvious.
Yeah, no, 100%. And then I said top 40 would be stronger, and I said the ZAR would be stronger. So by 2 cents, I also get 4 points. So
Mark, now it makes sense why he's counting it to the cents.
Because it matters, right? It matters. Which puts me and Keith on 4 points each, Mark on 3. And the scoring gets interesting because this is our 12th year. And I actually was trying to find the first one because I think the general view is we probably had beers somewhere and decided to start this 12 years ago, and now it's become the trend. But if I add, and last year we shared it, but I'm not doing third points. No. So I gave everyone a half point for last year. So that new score is, I've got 4.5 over the years. Mark has got 4. Keith has got 3. But Keith is storming back because a couple of years ago, Keith had 0. So we won't take that away from him in the least.
Absolutely. My predictions were far too complex. I compound predictions in predictions. Now, call directionality.
You used to do crazy predictions. I remember it would take me a day sometimes. There was some Porsche product. There was Eastern Cape property. There's been some stuff out there. Okay, so now we start for the year ahead, 2025. We'll come back Jan next year. 3 predictions each, and then a top 40 and a ZAR. Keith, we'll start with you, seeing as you are on the bottom and winner.
Super. So I normally like to do 2 global predictions and 1 local prediction. Just given what's happening in the world, I'm actually doing 3 global predictions here. Starting with AR, but the question is, what am I predicting in the AR space? And Sam Altman, and let me pause there and go down the slightly different rabbit hole. I find it absolutely bizarrely funny that one of the biggest frauds was a guy with a surname Bankman-Fried. He literally fried the bank. Mm-hmm. And now Sam Altman is the CEO of AI. He's literally Altman, alternate man. You can't make these surnames up. But Sam Altman tweeted something that reinforces my view of what has to play out in terms of AI. AI, and he tweeted that ChatGPT is currently making losses on their premium subscription. Their premium subscription. That's $200 a month. Huge amounts of money has been spent in the AR space. I mean, I went and pulled out some numbers here, and you could see that the Mag 7 have spent last year, FY23, over 100 billion. FY24, it looks like it's, because we haven't had the final quarter for some of them, that's still coming in, but it's probably going to be about 170 going on $200 billion spent on AR, and next year they're starting to predict even more. Here's the thing, none of them are making returns on this capital. If ChatGPT is making a loss on their premium subscription, they could boost their profitability just by not signing anyone. So one of two things has to happen in this space. Absolutely. One of two things has to happen in this space. Spending has to get cut, or costs, i.e. the cost of subscription, the cost of using AR has to rise. And that's the one I'm going to lean into. I do think we're going to get some of the big tech cutting their CapEx budgets probably in the back end of this year. But I think the easier thing to call and the easier thing to calculate is that subscription cost, the cost of use of AR is going to increase in order to compensate that. So to give you something simple to quantify, Simon, so you can go and check this, is the premium subscription for AR and ChatGPT is $200 per month. I think by the end of the year, it's going to be $300. They've hiked it 50% at least. And this is going to be across the board because there is so much money sunk into this part of the market. You've got to get an acceptable return, particularly in a world where interest rates are now higher. And that'll lead into my second prediction, but I'll get there.
Okay. I mean, I don't pay the $200. I pay Anthropic $20 because then I get both Claude and ChatGPT, which would cost me $20 each. And I don't know how I pay $120 and get $220s, but I take your point. And I mean, they might add some bells and whistles, but they need to ramp prices. Yeah. And I mean, they are just losing money, and we're getting great stuff for free.
Yeah, and that doesn't last forever.
No, it's like Uber. Remember when Uber was cheap?
Yeah, funded by zero interest in America, funding our Uber trips. Those are good times, guys. But yeah, that's all reversed. Ubers are not cheap anymore.
No, they're not. Mark, your first prediction?
My first prediction is going to be global as well, and it is going to be the bromance between Elon Musk and Donald Trump will come to an abrupt end. And we will quantify that by... we'll come to how we quantify that shortly, but maybe the context for it. I mean, I look at how 2025 has started out, and you look at how influential and disruptive Elon Musk has become starting out 2025. You know, I mean, you cannot believe who's, a tech billionaire is sitting there chirping the outgoing Prime Minister of Canada and talking to him as he's no longer the 51st governor of the US, or governor of the 51st state, whatever it might be. This kind of meddling in the UK politics. I appreciate it's all lovely for free speech. It's all lovely for, disrupting the status quo, and we all love that idea. But the reality is that it is becoming quite disruptive, and it's not something that we can end up seeing a positive outcome to. And I appreciate that Musk is an innovator. I appreciate that he's a disruptor in the economy. He's done some very interesting things, but it really doesn't sit well as somebody, if I was sitting as one of the shareholders in one of his businesses or one of the other projects that he's been involved in. This is not what you want to see your executive leadership team doing. Especially when you've got, whether you're going to have Tesla, whether you're going to have PayPal, whether you're going to have whatever the new businesses are that come out and have to operate in those geographies, it can become it's going to become a difficult sell. And maybe he decides, he doesn't want to be an entrepreneur anymore. Maybe he wants to be in politics. But so my view is the bromance will come to an end quite abruptly. He will not be in charge of the DOGE or the co-lead of the DOGE in 12 months' time. And I think it's going to be very spectacular when it does end.
Mark,
I agree 100%.
You've absolutely ruined my third prediction because it was exactly that. It's like Trump doesn't have friends; he has followers, and Elon Musk isn't a follower. At some point, it comes to blows. Yeah,
I've actually got an over/under with somebody, and I'm actually my side of the bet is it'll happen before mid-year. But I think by next year, I think it's an easy. So so that's a Trump-Musk divorce, the DOG, which of course it's weird that a Department of Government Efficiency has two heads, but hey, I don't know, things are complicated sometimes. Yeah. Irony is free. So I am going to. I've only really got one sort of global one, and it is gold. I am still holding gold. I am still holding gold miners. The weaponization of the dollar continues. Certainly, central bank buying, which has slowed a bit in Q3, but that's not unexpected. They are a little price sensitive, but then they sort of balk. We've seen negative outflows from the ETFs in Europe and the US, inflows locally, but I think there's still space for gold. I don't believe that inflation is all gone. I don't think that it's all kumbaya and peace. And of course, then we've got Trump next Monday being sworn in. So I'm going to say gold's going to trade $3,000 this year. Currently 26 and some change. I think we'll get through 3,000 relatively easy. And it is, gold was a great performer last year. I don't know if it's going to give the same sort of 20+% returns, but from its current levels, it's around 12 or 14% it needs to do. So my first call is for gold to give us plus 3,000 at some point during the 2025. And then I got to decide if I'm taking my money and running or what to do with my gold.
Yeah, Simon, I have to agree with you. And don't forget, my thesis on gold is really the sterilization of the US dollar reserves the moment they switched off Russia from the SWIFT system. And that's really triggered by geopolitical conflict. And Trump in power, he's not very good at not having conflict. So everyone looks at the guy hovering with his finger over the button, and now it's Trump. You go, if you're a central bank in a country that isn't America, dollars are not the thing. You're very cautious about holding dollars, just in case your country picks a fight or irritates Donald Trump and gets switched off from the system. Gold is the only alternative.
Yeah. I just need some rand strength because I'm still needing to move some money offshore. Keith, let's go to you for your second.
Okay, so building from an AR view, and I touched on the fact that interest rates are rising, and it sounds funny where the Fed's cutting because we're worried, but you got to look on the long end. And when you have an incoming president that wants to cut taxes, boost spending, and insert tariffs, and you could see the long end of the bond curve, which, by the way, the Fed only decides the policy for the short end. The market decides what the interest rate is on the long end. And you could see the long end, this is what's called bear steepening, where the long end is rising. And we haven't even started with the tariffs. We haven't even started with the tax cuts. The US 10-year, and back a couple of weeks ago when I was thinking of this prediction, it was the US 10-year was trading closer to 4%. So having a view that by the end of the year it would have breached 5% was a bold call. It's actually trading at 4.7%, but you know what? I'm sticking to my guns. And I do think, first of all, the US 10-year bond yield will breach 5%, and it's worth putting this in context as well. The last time the US 10-year yield was at 5% was in 2007. There's an entire generation or two that has never operated in the market or an economy where the 10-year US bond is at 5%. Bear in mind that US mortgages, although they might be fixed rate, they're not floating rate predominantly like South Africa, the mortgages are priced at a bank level based on long bond yields. So that means property market under pressure in America, all sorts of knock-on effects. But US 10-year goes comfortably over 5% this year.
Yeah, no, I think so. I think easy. And the US property market, some anecdotal data suggesting it is struggling. Because if you're currently sitting on a 2.5% 30-year mortgage, you're not going to re-sign for a 6 or 7%, so you just stay where you are.
Well, you're actually trapped. It weirdly has knock-on effects into the labor market, where you're sitting in Seattle and you've locked in a 1 or 2% fixed rate mortgage for 30 years. you get a job offer in New York and want to move there, you have to sell your house and buy another one at 5, 6, 7% interest rate. You don't. So the labor market starts to kind of crumple. Perhaps pushes remote working a bit more. There's all sorts of weird knock-on effects. But the bear steepening in the US is aggressive, and I think it's going to continue quite a bit this year.
Okay. US 10-year above 5%. Mark, a second from you.
So I kicked this one. I mean, there were a bunch of things that floated around. I mean, one, I thought maybe Sasol to double could be quite fun. I thought maybe
Petrie would agree with you.
Yeah, I mean, I know there's lots of interest in Sasol at the moment. It's becoming its own kind of meme stock. But China maybe 10-15%. But I thought I'd have something, but maybe a bit more. Maybe we'll take a leaf out of Keith's Arsenal here.
Esoteric.
But we're gonna go for a trifecta. We're going to say UK, South Africa mid caps, and Brazil as measured by the MSCI Brazil.
Sure. You're writing all this down.
Will outperform the US as measured by the S&P 500. So all three will outperform that. And kind of the thesis goes like this. I mean, thesis sounding very grandiose, but the reality is UK, it looks incredibly cheap at the moment. I mean, in the same way you could buy South African banks on single-digit PEs and nearly 10% dividend yield in some cases. I mean, there's some big insurers there. The UK is very depressed from a price perspective. You think that the South African market is struggling with delistings. UK hasn't been a hell of a lot better. There's a lot of things guys looking to take out secondary listings or primary listings in the US. But the UK looks cheap. I buy the South African story. I feel like a bit of an optimist. The reason I picked the MSCI, the mid cap in terms of the South African market is just that my rand prediction is materially stronger rand, and I just think that the mid cap is maybe a better kind of proxy for performance of that. And then Brazil, I think it's just been a market that's been hammered left, right, and centre. And yet they're doing some really interesting things. They've got a vibrant fintech sector. That people you see it popping up in different discussions at the moment. It is an emerging market play. It's a big market. That's my prediction for the trifecta there.
Okay, UK, SA, mid, Brazil. I agree with most of it, and certainly I think the S&P. I mean, we've just had such phenomenal return. And only 20% of the return has been earnings and dividends. The rest has all been valuation expansion. That market's expensive. Cool. Okay, so then my second, and I'm staying local, and I'm looking at GDP, and Mark, to a degree, your playbook. I think we can. Eskom seems to be fixed. I think we can see materially better rand over the course of the year. I think we might even see a bit of an uptick in some of the commodities. Not too exciting, but maybe the PGMs can get to 1100 instead of 950 type of scenario. And so I'm backing our president, but not quite as boldly as he is. He's talking about GDP growth of 3.25%. I'm like, yeah, Mr. Prez, love you, but no. So I'm
that
saying
would be great.
It would be great, but I think we can do 2% for 2025. It's going to be difficult because we wouldn't have had the last quarter's data out, but we'll make a call when we get there. I mean, either I'm going to be completely wrong or nail-bitingly close, and we can call it. But I think there's the two-pot money is being spent left, right, and centre. We saw it in vehicle sales in November, December. December was the best December in a couple of years. November was the best month since, I think, March of 23. We've got electricity, which makes things a whole lot better and just makes being a South African, whether an individual or a business, just like actually not quite as horrifying. And I think we can get some good GDP growing. There's risks. There's always risks. They are left, right, and centre. But my second is SA GDP plus 2% for 2025.
Yeah, I mean,
that would be a wonderful world to live in.
Yeah, and I mean, I look at the BER. I mean, Bureau of Economic Research. I mean, they're typically one of the more conservative in terms of their forecasting. They're also around about 2%. So yeah, I think that I think it's a good call.
Yeah, and it'll just be. I mean, if we remove the pandemic, we haven't had a 2% GDP in over a decade. I mean, it's not a lot. Let's be clear. 2% is not a lot. We've done 5 and 6 under Mbeki, Manuel, and Mboweni, but it will be it'll just be such a fundamental change, much like having a little bit of power. So, Keith, your third one, you're also going for a divorce.
Yes, but I feel like I should change it. I'm swerving a little bit. There's a couple I'm bouncing around. I mean, let's not double up on predictions. So forgive me. This one is slightly more improvised. So I'm contemplating. Let me talk on my thoughts and I'll arrive at my prediction. So I'm contemplating because I've done a whole lot of work into GLP-1s and the pharma sector and things like that. And my sense is when you have a look at the pipeline of GLP-1s incoming, there's going to be huge product deflation in this area. And in fact, the early winners, Eli Lilly and Novo Nordisk, they're actually going to be long-term losers, where it just deflates the value of their revenues massively. And in fact, you're also dealing with a mostly discretionary market because medical cover doesn't cover a large amount of it. It's actually a little bit more of a smaller addressable market than people realize. But yet you look around the world and what we have is because one of the challenges early in the years of GLP-1, which was that they couldn't produce enough to satisfy demand. What that also tells me is that there is a bottleneck in terms of pharmaceutical production capacity in the world. It's not just the IP and the R&D, and you can throw it all in, but you've actually got to make these things and roll them out into the market because you can't sell a product that isn't actually there. So my thinking is because the large local and emerging market generics producers, Aspen Pharmacare, and they've got significant manufacturing excess capacity that they've actually just signed. Eli Lilly's GLP-1 they've got vaccines into Africa, and that's capex spent. So the free cash flow that kicks up from this is massive because you don't need to build the factory, you just have to fill it. And in a world with lack of capacity, that's a really valuable thing to have. And the world's largest biosimilars, which is a generics in the biological space, like, for example, vaccines and the like, it's large molecule versus small molecule, is a company called Sandoz. They were spun out of Novartis. So I think a basket of Aspen and Sandoz is going to outperform a basket of Eli Lilly and Novo Nordisk. You can pick the currency, let's make it US dollar. It doesn't really matter because they're all being compared in the same currency. But yeah, so 50% Aspen, 50% Sandoz will outperform 50% Eli Lilly, 50% Novo Nordisk, which is showing what's kind of happening, and the bottleneck in the pharmaceutical side is actually not R&D at this point in terms of GLP-1. In fact, the pipeline of products coming on is quite bewildering.
Okay, no, cool. I like that. And it is, to your point. I mean, it was all about they owned it all, and now other folks are coming, and it suddenly gets a whole lot harder.
Absolutely. So how's that for an improvised prediction?
No, that was cool. That was fun. Yeah, to watch it on the fly. See the brain ticking. Mark, a third from you.
Cool. So third one is going to be Ripple, or XRP is going to outperform Bitcoin in 2025. Bitcoin obviously has enjoyed the adoption of the ETFs and the institutional support that's come to it. I think that provided Ripple can deal with some of its court cases and issues, and I think the change in the kind of regulatory environment post-Trump will be quite significant. I think there's more upside to Ripple in the long term, and there's a lot of talk about the kind of institutional support ETF market coming in to support it. So, nice and simple, Ripple to outperform Bitcoin. I don't really have a view on where cryptos will end up at the end of 12 months, but I do think that there's enough support for that relative to Bitcoin.
Yeah, almost a market neutral. Long Ripple, short Bitcoin. Where they go is not so important. It's just going to make some cash there. Okay, cool. So my third one, and I was betwixt and between. We got, was it late November, early December? We got some of the rating agencies moving us to positive. not moving us up. And let's be clear, we are many notches into drunk.
Moving the outlook, I think
The outlook,
was from stable to positive, which
Yes.
precedes. Yeah.
So I was looking at that, but then I'm like, you know what? These rating agencies are so slow, man. I can't wait for them. So I went the perhaps easier one, which is the grey list, which was February 2023. We got flung onto the grey list. There's a big meet of the FAFT people in mid-year. I'm not sure where they're meeting. And I think we can get off the grey list at that meeting. And there will be another one later in the year. But I think by this time next year, we should be off the grey list. And that wouldn't be, it wouldn't, so February this year will be 2 years that we're on the grey list. We've seen markets come off much quicker than that. I think, was it Mauritius that got off within like a year or so? So I think we can get off the grey list. And it feeds into my optimism around SA Inc., SA economy, 2% GDP growth, Eskom working, and then we get off the grey list. It seems, last I checked, I think there were still 6 of the 20 plus things we had to do, and hopefully we can tick those and no longer be grey listed. And I do think we might even get a rating upgrade, although we'll still be junk.
Yeah. I think that is a reasonable view. I mean, there's six out of the 22. I think it was maybe 4 out of the 22, but we got it down to single digits.
Yeah.
I mean, they still need to address that. But Mauritius did it. And I think they did it within 2 years as well. So we're in the time frame. Our guys have applied their minds. And as a person operating in the financial services sector, I think it would be fantastic to get off this list. It just gives a bit more credibility to our economy and our international transactions. That's only positive.
And it's the sort of thing which you can see something like the GNU sort of driving, because it's not that hard. You just got to tick the boxes and get the legislation. But, you know, when you're the incumbent party and you've been there forever and you've got a majority, you get lazy. And now there's a GNU, so that might help too.
I mean, as you say, FAFTA has literally given you a list. These are the things you need to do. You don't have to be creative about it. You just need to go and do them.
Yeah.
Just for clarity, Keith, when your clients give you a list and it says we want the share to go up,
No, there's a difference between a list and a wish list.
okay,
No, that's a good point. It's the wish part. Okay, noted. Okay, so let's get to top 40 and ZAR. Keith, your call on top 40 and ZAR.
Yeah, so top 40 green. Commodities, especially in December, got beaten down, which I think we're now getting in the bottom leg. So by the end of the year, the odds are they're actually comfortably higher. So it's really that call. Processed NASPAs is actually, for the first time in a long time, looking attractive. Good management, unlocking things and doing great stuff, ignoring the CMC listing by the US military. Tencent's going to fight that. I actually think there's a attractiveness there, and then the remaining basket in the top 40 is SA Inc. really focused, and that's looking good. I mean, perhaps the only weak one is a little bit of Richmond and luxury, but I think on a balance of things, the top 40 comfortably green this year.
Cool. Mark?
Yeah, echoing that, I think the green top 40, I think there's an optimism around. I think when you were talking about the grey listing, ratings upgrades, etc., like at some point you just look too cheap. I mean, you saw it last year. At one point, you could make more money by just holding ABSA shares than putting it into the money market. It was just on the dividend. Things were just that damn cheap. And I think that's, you just look, we have quality businesses here. I think we've also maybe become programmed just to be pessimists. And I know I'm probably the one to talk, but, there's a sense of optimism around. I mean, we just look at our own business. We see people, suddenly there's interest again, what's happening. Good start to the year, electricity on. I mean, it's just psychologically, there's just a bit of something in the air. I'm happy to go with that. Green on the top 40 and green on the currency. I think there will be a preemptive move in terms of the grey listing, but also ratings upgrade. And sitting where we are at the moment, I think it's a pretty safe call.
Yeah, no, I take your call on that. I'm agreeing on both. Green on the top 40. I mean, actually, my year-end power hour, I actually said I think we can outperform the US. That's in part because I don't think we can do a heck of a lot. I think the US is going to struggle to do much beyond single-digit return this year as measured by S&P, but certainly green on top 40, and I think a stronger ZAR, which is a much easier call to make when we're out at 1895-ish or there's about. I still think that even a sub 17, a 1680 is potentially on the cards.
Yeah,
but
I mean, there are a lot of
couple
guys
cents.
that are calling that. Yeah, 1650, 1680,
Yeah.
Yeah.
I mean, and sorry, I realized I didn't say my currency call. I thought we were going to cycle back through, but I agree with you guys. Stronger. I mean, don't forget, currencies are relative things. Trump's policy and what it's looking like in the States is actually leaning towards a weaker dollar. Inflation and all the other things, tariffs, etc., that could well weaken the dollar. And South African positivity and GNU and the like, grey listing being rescinded, perhaps even an upgrade in the back end of the year, strong real yields in our bond market, all of that points to a stronger rand. And then we also actually have a surprisingly weak rand right now as we stand. So your starting point is weak. The relatives are moving apart. It feels like a stronger rand as well.
Yeah, if we were at 17, it would be a harder call, but at almost 19, I think it's a bit of an easy call. So we all agree. Top 40 up, rand will be stronger. And gents, we will park that there. We will come back in a year's time. We will see how we're doing. See if Keith can drag himself closer to the top. It is close. 4.5 plays, 4 plays, 3. Not bad at all. And we've gotten moderately simpler. At least I won't have to go and find property prices in Gqeberha and other such places. Gents, appreciate Keith McLachlan, Marc Ashton, and myself, Simon Brown.
Thanks, guys.
Thanks, guys.